I'm going to show you how to confidently enter a trade as a beginner and some of the things that you need to look out for before getting into it. So come over here to my chart. This is Moderna. So I'm going to show you from soup to nuts how I actually got into this trade. Now, this is a short, and I want to preface this. Shorting is not dangerous. It is not scary. It is literally you take the chart, you flip it upside down. There's a lot of talk out there that shorting is dangerous, and it is dangerous. There's an infinite loss if you don't know how to go about it. But if you follow the rules that I put in place, it is the same thing as going long, probably more profitable because stocks fall faster than they go up, but it's taking the chart and reversing it. So I'm going to show you that right now. So if we look at Moderna, I noticed a couple of things here, specifically on the long-term chart. This is my weekly chart on the left, my daily chart on the right. I'm going to pull up the weekly chart. I saw that my stochastic or my trend was starting to go in this downward direction. So I'm going to pull up a black marker here, and I'm just going to cross some things out just so you can see what I was seeing when this was happening. So you got rid of that right there, and my yellow line was up in here. And you can get rid of all of this for the time being. So we were seeing that our trend was starting to kind of creep down on us. And why is that exciting? Because as the trend starts to turn and starts to creep down and we move into the sweet spot, we say, hey, we have an opportunity to make some serious money here, especially because under this level, you have your support there. This is where you were at. You have a long way to fall. You could fall down to below 120, which we're approaching now, all the way down to 100 and probably down to $80 if everything pans out the right way. So let's clear all this up. What do I need for a safe enter of a long-term trade? Well, I need a couple of things. One of them being 3 days in the sweet spot. So my patience kicked in and said, we need 3 days in the sweet spot here. But because we're getting so close, it was looking so good, we were right around here, I threw a tracker share on. What is a tracker share? A tracker share is one share of the stock, just one. Worst case scenario, I shorted this thing at 130 some dollars. It went against me. I would exit. Maybe I would lose $20 or something because the trend would just reverse. The stock price would go up. Best case scenario is exactly what happened. The stock price breaks down. I enter it very early on. So instead of, and why do you have a tracker share? Why do I buy that single share? Because when I come over here and I have a watch list of a bunch of stocks, you just look at this long list, I'm going to lose it. I'm not going to be able to pay attention to it. But if I see it in my brokerage account every single day, it's going to remind me to go back and say, okay, let's get into this thing. So I had my tracker share on there and I was waiting for a couple of things to happen. I wanted to be in the sweet spot for 3 days. So if I pull up my whiskers here, you can see I was in the sweet spot for 1, 2, 3 days, meaning that my stock price was there. We were in it. And then I waited for the engulfing candlestick, which I got yesterday. I got my engulfing candlestick. Now, was it all easy when I got that engulfing candlestick? The answer is no. I'm going to go over here and I'm going to show you. What were we fighting yesterday? You had to pay attention to a couple of things. Well, we were fighting the 50-day moving average. And if you're in the community, I was actually walking people through this all throughout the day. I was in there chatting with people saying, okay, guys, I entered Moderna, or I got my tracker share on Moderna. As I got that engulfing candle in the beginning of the day, I started to see a little bit of a pullback. I didn't enter yet. I said, I'm going to look around 3:50 in the afternoon. And we were just constantly texting in the Patreon app. So if you want to join the Patreon, jump in there right now. The link is in the description below. This is the type of stuff that we do. We walk you through what is going on, what I am personally looking for, and what other people in that community are looking for. So if you look at this one, we were below the 50-day moving average. I was worried that this would pull right back up. And if I come over here to the 15-minute chart and pull up Moderna, it's going to show you what I was seeing yesterday and what the fear was. So this is yesterday on Moderna. And you notice you had the big move down during the day, this right here. And then what happened? You started to pull back. So the candle that I was actually seeing on Moderna didn't look like this. This wasn't until the end of the day. What it looked like midday was something like this, where I had this long wick on it. And that worried me. I would not have taken a position yesterday. But when 3:50 in the afternoon came around, I said, you know what? We're all the way here at the bottom of this candle. I can safely enter this thing. And now I am in the stock. Now, how do I know when to exit at this point? Well, this is going to take some time. There's going to be a follow-up on this. I am not worried about candles anymore. I'm in the stock. I can actually get rid of candles, and all I pay attention to is my trend. This is where the trend being your friend comes into play. You have to always remember that. and this is going to dictate the rest of the trade for me. Now, I think a good place to go from here is comparing this to something that necessarily didn't work out. And this is the important thing. So let's go over to an American Express. Now, it's easy for me to go in and show you, and you can see why something worked out swimmingly. But at the same point, I had a tracker share on American Express. Why did this one not work out for me? So with American Express, I was looking and really saying the same thing. You notice, pay attention to this right here. The stochastic was the same as with Moderna. I knew that it's not there yet. We want this yellow line to be in the sweet spot. But I kind of had that same concept behind it. We're creeping down. We're starting to get that trajectory down. But what do you see over here on the daily chart? Well, you see that we were running into that 100-day moving average, just like that 50-day moving average. The big thing here is, where did the stock price close? What did the candle look like? So if we just go in and look at this. So you had a nice engulfing candlestick, and let's just think that our trend is coming down on the weekly chart. Day 2, you had a nice engulfing candlestick, but what happened here? You bounced off the 100-day moving average, and you didn't close at it. And remember, on Moderna, I said it needs to get below the 50-day moving average and stay below the 50-day moving average. So if we're looking at moving averages, a question you may have is, what is the importance of the moving averages as far as strength goes? It's 200, 100, 50, 25. The 100-day moving average plays a very important role for financials like your banks and stocks like American Express. So when we get here, American Express, it came below. Yes, it came below, but it was still attached to the 100-day moving average. And what happened? It wicked back up. You see that wick right there? That means that the stock price pulled back up on you and didn't close at the bottom. And then subsequent days, it just continued to carry. So this tracker share is not working out the same way that Moderna worked out. I'm not getting that engulfment, that separation from that major moving average. As a matter of fact, I'm still in this thing. I don't see any reason not to, because if we come over here to the long-term chart, the trend is still beautiful. The trend is still setting up really nicely. What we need to see here, however, is we drop into the sweet spot with the yellow line for 3 days. We stay in the sweet spot with the red line for 3 days. And most importantly, and nothing else is going to matter with this American Express tracker share or this trade, if American Express does not get below the 100-day moving average with engulfing and continue and follow through the next day. Now, I just noticed that there's a dividend payment coming out. Dividends will typically throw the stock price down. It's just another little thing that you can look for, usually not permanent, but it will throw the stock price down just enough to maybe change that trend. And that is a very important thing to see. What is going to change that trend? What is going to create that engulfing candlestick? What is going to drive that selling volume to get me into a long-term trade where my tracker share actually paid off and it's beneficial? And that is kind of the beauty of tracker shares and how you enter a long-term trade. Now, I know a lot of you that are watching this are beginners, and that is fantastic. I made a guide that's 45 minutes. It's a comprehensive video of everything that you need. And this is a video where you can go back to it. It's time-stamped. Every little detail that you need about getting into trading is there. Go click that video right here. Have a great day.